Hi, my name is Robin. Welcome to this three-part video series which I've entitled Professional Trading Secrets. I've been busy trading for the last 30 years and there are many people who follow my trades and watch my social media posts. Well, I'm glad I have finally found time to make this video. I hope this trading technique that I'm about to share with you will have a profound effect on your trading as it had on mine. My trading journey has been long, winding, and rocky. It cost me a great deal of money and time. Learning this method was a defining moment in my life and trading career. I hope by sharing this, it will also change your life too. This is what I'll cover in this three-part video series. In the first video, I'll cover on the key to winning, and that is how to read the language of the market. In the second video, I will talk to you about the 2 key secrets to consistently profit from the market. In the third video, I will talk about the 3 must-know strategy to gain a trading edge. I hope you will stay with me throughout this 3 video series, and I'm sure you will enjoy it. Well, I'm sure a lot of you out there already know me, but for those of you who don't know me, let me just give a short intro about myself. Well, I have been a full-time trader with Philips Securities for the last 15 years, although I have been trading for the last 30 years. So for the last 15 years with Philips, I have been their top stockbroker, one of their top stockbroker, and I have been also for many years their top trader. Well, as you could see, I have won many awards, and I've won these awards for many consecutive years. Well, as you can see, I've been featured quite regularly in the media. As you can see here, I've been featured in the Borneo Times, in my paper, in the Chinese paper, Cao Bao. And most times in this media write-up, they write out about my story as a trader and also my trading techniques. And I have been participating in major trading fairs. I spoke there as a guest speaker in the annual Invest Fair at Suntec City, but they have not run it in 2020 because of COVID. And also for the last 13 years, I have been an accredited trainer for Singapore Stock Exchange. I ran many programs for them. I ran many trading courses for them. And here what you could see is that I am running in front of 200 to 300 crowd in the auditorium. I run a live trading program. So what am I doing here? I'm doing intraday trading, trying to show the crowd how I make money in the minutes and in the hour in a very, very short time. And you can see that the crowd are very curious. And every time I do live trading like this, it attracts big crowds. So here I'm a guest speaker for Singapore Stock Exchange. And in 2019, with SocGen, I conducted a weekly market outlook of the Hang Seng market. And in this weekly market outlook, I spoke about my outlook for the Hang Seng markets and also some key China and Hong Kong stocks. Well, a lot of my work is also featured in Macquarie. You could see my trade plan there. You could see my market outlook on the Macquarie website and their Facebook. So what's my life story? So what do I do before I became a full-time trader? Well, I believe a lot of you can never imagine I was a naval officer before. I was a career naval officer before. I ran the ship. I became a commanding officer of a Navy boat before. Here you see me on the Navy corvette, and also I was trained in the submarine before. And in the Navy, I was also specialized in anti-submarine warfare. I attended the anti-submarine warfare course in the US Academy in 1989. Well, what made me join the Navy? This movie. What made me become, or inspired me to become, a full-time trader? This book. Jesse Livermore, the greatest stock trader in the world. Well, you know, this guy, I believe that he is truly the greatest stock trader. And the reason is he is, like a lot of us, a common wage earner. All right, and he turned his common wage or an average wage, right, into the equivalent of billions today. And when I read his book, it really inspired me how, you know, it was like a common man, and he made his billions of dollars through trading. And, you know, in one chapter of his book, he spoke about his trading strategy. And his trading strategy was price action. He said that, you know, the secret to his success, all right, was price action. And I was really intrigued about price action. And as a newbie, you know, this is something that rings in my head, and I went out of my way when I started to learn how to trade to find out what price action exactly was. Well, I think this is a very important quote from Jesse Livermore's book. And he said this, he said, "I know from experience that nobody can give me a tip or a series of tips that will make me more money for me than my own judgment." So why is this so important? So the message that Jesse Livermore is trying to convey to us is that if you want to come into the world of trading, whether to be investing your money or to do part-time trading or full-time trading or to be a professional trader like me, you need to learn trading as a life skill. You need to be able to make your own judgment call, right? You cannot depend on somebody else. You know, most newbie that start trading like me, you know, when I first started trading, and like a lot of you out there who are newbie, when we first started trading, we depended a lot on other people. We depend on our friends for tips. We depend on our broker, all right, for stock recommendations. We read a lot of research report and try to derive something from there. All right, so Jesse Livermore is saying, well, you know, it's better that you depend on yourself, because, you know, all these people that you depend on may not be around to support you all the time. And in 2008, there was an article written about my life story on the Chinese newspapers. All right, and it says in Mandarin, 曾经炒股输身家，再跳苦海赚身家. So what does it mean in English? What it really means is that having lost everything, all right, from trading, nearly gone bankrupt, coming back, all right, to be one of Philippines and Singapore's top trader. So what's this story all about? The story about me and how when I started trading in the 1990s, you know, with a lot of guts and with a bull market behind me, I made $300,000. All right, in the 1990s, I made $300,000 of profits. I could have just quitted and, you know, live life happily ever after, but I continued to dabble in the market. I did not understand what the market was really about. I continued to trade. And guess what? In 2 weeks, right, I lost $500,000, $500,000, and I was $200,000 in debt. Well, I spent the next 2 to 3 years in what I call the dark ages of my life. You know, having to sell away my matrimonial house, having to squat in a rented home for a couple of years. And I was fortunate, I was able to trade my way back again, all right, to be one of the top traders in Philips and in Singapore. So this is Michael Jordan. I believe many of us know who he is. He is an American legendary basketball player. And let me quote from Michael Jordan. He said, "I've never lost the game, I just ran out of time." So what has this got to do with trading? All right. So I think what Michael Jordan is really trying to tell us is that, with age, or with his superior skill in basketball, he would never lose a game, all right, if the referee has not blown time out of him. If the referee has continued the game, he would never lose the game. All right. So just like trading, right, losing is part of the game. What you need is an edge over other people. All right. What you need is an edge over other traders, and over time, you will surely win, and you will surely profit from the market consistently. Well, in March 2020, and that is last year, when COVID strikes, all right, in March, the market fell, and the Wall Street indices fell by close to 38%. So guess what? While everybody then was losing a lot of money, I was making money, and I was really enjoying myself with the market because I caught the right direction. And in this article, Dr. Wealth wrote an article, interviewed me, wrote an article about me. He got all my trades together, he tallied them, and he verified my profits, my 1 month profits there, because the downturn didn't last very long. It only lasted 1 month. And on the Philips CFD, I made $175,000 in 1 month. And a lot of when I was making that money, a lot of people are asking me, Robin, how did you know? Obviously, I shorted the market, right? So a lot of people are asking me, Robin, how did you know the market is coming down? How did you short? How did you have the conviction to short the market? All right, let me share to you the secret. All right, you guys know that a lot of my views are not closet view; they are public views. I air them, I publish them on social media, and when I had a hunch, right, that the market was about to collapse, all right, see this sort of warning, all right, that I published about Wall Street. I warned that Wall Street could be topping out anytime on the 4th of February. All right, but the Dow Jones did not top out until towards the last week of February, and you could see that what I predicted came true. And when Dow Jones, right, fell, or the Wall Street index fell between 30 to 38%, as I predicted, a lot of people became curious, and they were asking me, how did I have that strong conviction that the Wall Street indices was about to crash? And let me just and they asked me, did that chart pattern give me that conviction? Yeah, I refer back to this slide again. So a lot of people are asking me, did this chart pattern of a double top formation gave me that conviction to predict a market crash? And a lot of people it was a valid question. A lot of people ask me, there's a lot of chart patterns on many stocks that looks like this, but they never turn out to be a crash. And what gave me that conviction? All right, so let me just share with you that secret. All right, and I hope that a lot of us can learn something from this. All right, this is a secret. It is not about the double top chart pattern, all right? It is about a macro trade plan. So as you can see in this chart, right, in my macro trade plan that stretch about 25 years, All right, this macro trade plan has got two channel lines. All right, one channel in the below, and you could see that in this channel line, it correctly predicted the 2008 great financial crisis crashed. And not only it predicted the top, you can see my cursor here, it also caught the bottom. All right, and if you have been following me, all right, in 2008, it was a big story about how I turned $100,000 shorting the market here in 2008, and by the time the market bottomed in 2009, my $200,000 became $2 million. All right, and since then the market has been on the uptrend, and you could see that the next channel line, which is the uptrend, and this uptrend has lasted until today. All right, and the important inflection point, all right, on this uptrend is the two major channel lines highlighted in blue. And for me, it was very simple in this macro trend. Every time the prices touch, all right, the top end of the channel line, something big is going to happen. There's going to be a big correction, even if it is a bull run. And here, all right, just in late February last year, it hits there, and that was when I was so convinced that the market is going to crash. I stick out my neck and make a prediction that market was going to crash. A lot of people who heeded that call, all right, was spared from the market crashed. All right, so on this chart, you could see that this double top here for the Dow Jones, and the market took a deep dive. Well, after the market hit the bottom in March 2020, it has been on a relentless bull run for the last 11 years. And we all know that the last bull run, all right, was led by technology stocks represented by the Nasdaq index. And in that bull run, a lot of people along the way have been trying to predict market correction for Nasdaq, and many people got it wrong. Well, I use the same method that predicted the Dow Jones and the Wall Street Index crashed in March last year, and with the same method, right, of a trade plan, on 31st October, I predicted that Nasdaq, all right, although still on the uptrend, it's about to do a 10 to 15% correction. I even predicted the day that it will crash. So when Nasdaq, all right, hit the top or my target at the top end of the channel on 31st October, I knew that the correction was very close, and I was watching the price action of Nasdaq day by day, bar by bar, very closely. And when I saw that price action coming, what price action is that? When I saw that price action, all right, in terms of how the price move in relationship to the volume, I sounded an alarm on 3rd of September, and I said, all right, on 3rd of September, the crash is coming. All right, and I said it's an imminent correction. And how do I know that? All right, I explained that it was because of these two huge volumes. You see here that? All right, so most people, right, when they look at these huge volumes and they look at this uptrend accompanied by the huge volume, they would say that, hey, Robin, it is a bullish sign. All right, it is an uptrend accompanied by higher volumes. But when I saw this, it was a toxic volume. It was not a good volume. And true enough, all right, it turned out to be a toxic volume because the market, you saw that it hits right the top, all right, of my trade plan, and it collapsed, all right, and it collapsed. And how do I know? How do we know, all right, that sometimes when we have a huge volume, it is a good volume. When you have an increase in volume, it is a good volume, and sometimes it is not. Sometimes it actually represents a market top. All right, so these are the secret of price action. This is how price action is so powerful. It is always ahead of the curve. It can tell us what it's about to come, whether the market is about to collapse or market is about to rally or market has bottomed out. All right, so these are the secrets that I want to be sharing with you in this three-part video. All right, so it's so important, all right, for us, all right, as trader to be able to understand the market trends. All right, I've been trading for the last 30 years, and the market, in the 30 years ago and the market today, let me tell you, they are totally different, all right? Today, we live in a digital world. I must stress, it's a digital world, all right? And, in those days when I traded the market, we didn't have internet, and we didn't have online trading. All right, so information was very scarce, is what you read in newspapers, and in those days, the cost of trading was very high. I remember when I first started trading, the commission was 1% one way, all right? So if you do a round turn, it's 2%. So, it is almost impossible to be a full-time trader. And in those days, the market had, only go up most of the time because shorts are not allowed. But today, the landscape of the market has changed, all right? So those who are unable to read, all right, how the market has transformed into what we are today, those who are unable to decipher the new trends that we are in, all right, they will be the loser. All right, so what are the market trends today? Today we have weird market trends, all right, and you really, we really as a trader must be able to read the market correctly. All right, take Warren Buffett, for example. All right, so Warren Buffett, right, he is a legendary value investor, and many will regard him as the guru of value investing. But see, in last year, he has underperformed the market. And the reason is really because he has stuck, right, to his old value investment strategy, and that is to continue, all right, to invest in brick and mortar value stocks. All right, he failed to recognize that we have gone into a digital age. All right, so this is Cathie Wood, right? I'm sure a lot of you would have heard about her. She is like the new investment guru today, and the reason is because she has done so well today in her funds, right? She launched a couple of funds, and they have done so well, and those funds are really in the innovation sector. All right, and the reason why she has done so well is because she was able to embrace the digital age, right? So she invested in stocks like like Tesla, Squares, Roku, and over the course of last year, asset under management under her flagship ARK Investment, all right, grew. And under her stewardship, returned an eye-popping average of 120% last year. An investor with the foresight to deposit 10,000 in ARK Investment on the first day of trading would be sitting on a 62,000 worth in its account as of 5th of March. And in this new age, right, you not only have to know the new trend, you must not only know price action. You need to know so many things. All right, you need to know what is going around you, who's the guru around you. And Cathie Wood, right, she even announced every night in the email. All right, if you subscribe to her email, she sends out an email and she highlights exactly the stock she would buy and sell in her funds. And it attracts a lot of people, and those people who followed her last year really made a huge sum. All right, and today we have heard of this Reddit phenomena. And I remember today we are not only living in the digital age, all right, we live in a social media age. It is an age where social media, all right, is so powerful. It drives many things, and it also drives the forces of the crowd, right, also drives stock prices. And a lot of us will know that one of the stocks, right, that came out of the Reddix, all right, was GameStop. All right, this Reddit phenomenon actually short squeezed the fund manager or the hedge funds who shorted GameStop in a big way, and the Reddit phenomenon short squeezed them until so much so that buyers or Citadel and Point72 have to step in with a 2.7 billion rescue of Melvin Capital. All right, so you could see that in this new age of trading, social media actually do a good part. All right, and today, we have people going to the Twitter, going to the Reddits, going to the Clubhouse, going to the OnlyFans. These are some of the names that today's the new age traders and investors go to look for trading ideas. And today, remember I said that when I first started trading, the commission was 1%. All right. Today, commission is going to zero. All right. We have heard about how Robinhood, all right, was such a popular broking house. All right, when they brought the cost of trading to zero. All right, and it attracted a lot of traders today, especially the young people. All right, to just went into the market to punt the market and to trade the market in droves. All right, so remember this. All right, in those days I didn't have an edge over the market because the cost of trading was so high. All right, but today commission is zero, which means that even if you just take a punt, all right, you will have a 50% winning chance. All right, imagine, right, if you can develop a skill and have an edge over the market. All right, this may be the most important life skill you will ever have to learn. All right, so what is the difference, all right, between going to the casino, all right, and trading in the stock market? All right, so the reason why I don't go to casino, and I believe a lot of people don't go to casino, because we know that when we go to casino, the chances of winning is slim. All right, you're not going to win the house, and over time you are going to lose because the house have the edge. All right, and this is a game that I know. All right, roulette. All right, and in roulette there are two types of roulettes: American and European roulettes. In American roulettes, there are two sets of zero in the 36 numbers. In the European style, there's only 1 0. And of course, all right, if you want to be punting, all right, taking a bet, all right, you want to go to the European ones, because the European ones only had 1 0, which means, all right, their edge over you is not a lot. All right, I mean, it is 1 out of 36. And the reason why the house get advantage over you is because oftentimes or over time, all right, when you bet, all right, the dice will fall in the zero and the house will make a clean sweep. All right, I spoke about the casino, all right, and the casino have an edge over you, and over the long run, the casino will win. What about betting on horses, all right? What's the difference between betting on horses versus versus investing in the stock markets? All right, so the reason why I don't go to bet on horses is because, all right, when you go to bet on bet on horses, all right, you have to bet on which horse will come in, all right, before even the race starts. And most times, when you go to bet on horses, by the time the race starts, all right, you will already know that, oh boy, you got the wrong horse. But it is too late. But in the stock market, it is different. All right, it is different. You can see all the horse starts running. All right, and if you have a system, if you have a method, and you have a strategy, all right, you would be able to bet, all right, on the right stock, all right, because you already see the price action of the stock going up. And of course, if you want to be betting on the strong stocks, or you want to be betting, you always want to bet on the strong stock or the front runner. You don't want to be betting on stocks that just keep going down on the downtrend for a prolonged period. And that is why Jack Welch, the legendary CEO, he said that if you don't have a competitive edge, don't compete. So likewise, if you don't have a trading edge today, if you are new out there, you don't have a trading edge in trading, please don't come into the market. All right, you will, or you have a high chance, very very high chance of losing to people who has an edge over you. So what is a trading edge? All right. So a trading edge to me, all right, is is that you have a back-tested, proven trading method that brings you consistent profit. You have a very good way, a very sound method of managing your risk, and also, right, your trade. You can manage your trading psychology. So what is trading psychology? It's a lot about the greed and fear in you, and you have to learn how to manage it. So the one that has got a great trading edge, right, are somewhere in this segment here. All right, you have most parts of everything: the trading method, the risk management, and the trading psychology. So is there a holy grail to trading? So as newbie, right, and a lot of you out there will be the same as me when we first started trading. As newbies, we are always thinking that there is a holy grail out there. All right, there is a secret formula out there. All right, and if we or even find or there is a guru out there, and if we can find this guru or this secret formula or the holy grail, we will be able to win or to beat everybody in the market. Is there such thing? All right. Let me just tell you that there is no holy grail or one formula or one method that will win all. All right, there is certainly great trading strategy out there, and this is what I want to be sharing with you today. All right, so the two core strategy that most investors talk about today is technical and fundamental analysis. So what is technical and fundamental analysis? All right, so when we talk about fundamental analysis, we talk about people who look into the company's balance sheets. All right, they look into their numbers in the income statement. They look into the cash flows. All right, they even look into who owns the company. All right, or the company management, who manages or owns or runs the company. All right, and you could see that's a lot of things to learn, all right, in fundamental analysis. But in technical analysis, all right, which is in the other camp, all right, what traders only look at is the chart. All right, they believe that the price on the chart tells everything. All right, the price of the chart, all right, tells the real story behind the stock. So what is my version of a good strategy over the 30 years of trading? So remember I said that I have gone through a long and winding trading journey, and many times I've lost all the money I have, having to struggle to come back again. And through this whole journey, let me just tell you that there's something I learned. It's not about just fundamental analysis. It's just not about technical analysis. It's not just about psychology. All right, it is about something in between, and that's where you need. All right, so fundamental analysis. all right, tells you what to buy, all right, tells you the which sector to buy, which stock to buy, but it doesn't tell you the timing. So a lot of people who just depend on fundamental analysis or what you would call value investment, they will just have money and they will buy and they will just sit on it. All right, if they get it wrong, it's going to be tough. If they get it wrong, they are going to suffer hefty losses. But on the other camp is technical analysis. All right, so technical analysis tells you when. All right, so it tells you when to enter the market. When is the right time where you will enter the market to buy, and when is the right time you will exit the market. And psychological and trading psychology, it's about really about greed and fear, and you have to control that greed and fear in you in order to make sure that you continue, all right, to maintain the consistent profits. But then, in the school of technical analysis and the school of fundamental analysis, there are so many schools of thoughts which is correct. When most people, right, when they start dabbling with the market or start, going into the market, most people would, just go into fundamental analysis. All right, they would really just love to, with the money they have, just buy and forget and hold good stocks. But let me just tell you, that we have learned from the great financial crisis. We have learned from so many crashes in history, and the recent one in history last year during the pandemic when the market fell 38%, a lot of stocks were down 50%. So as far as fundamental analysis is concerned, all right, it takes time. You could see from this diagram, right, if you want to be good in value investing and fundamental analysis, all right, and this is a top-down approach, you must first understand the economy, all right, the macroeconomics, and from the macroeconomics, you must know which is the sector that will benefit from the economy. Like, in this COVID, not all the sector benefit from the economy. We have, stay-at-home stocks that was favored, particularly stocks like Netflix and Zoom video, example, all right. And then, only certain industry, all right, will be favored. And after just studying the macroeconomy, the sector, and the industry, the profit, you have to stock pick the right company. Let me just tell you, a lot of companies, all right, have a big team just to study this. So it takes fundamental analysis, takes a lot of time, and if you are starting off and and like I said, most newbies, all right, when they come into the market, they want to be a young analyst themselves. They believe that they could do the job, all right, of an analyst. And let me caution you, it is dangerous, all right. It takes time to to be able to understand and to study fundamental analysis, and therefore as far as I am concerned, I read a lot of views, all right, or research report that to derive fundamental analysis. I want to hear what the big boys are saying. I want to hear what the big research house is saying, because what really matters is this big research house with their very popular analysts, and that is where the money will flow, and you have to follow the money flow. So even in technical analysis, there are two major schools, all right. One is price action versus indicators. So I always tell people when it comes to trading, especially if you want to rely or use the charts, all right, there are only two skills, all right. One, you depend on somebody else's formula, which is an indicator, and the other, you depend on yourself, and that is you follow your price action. All right, so you have to decide what you want to do. All right, but I believe that it's so important for you to learn how to trade with price action because it gives you a life skill. All right, why do traders want to trade? All right, so most traders, right, or investors, when they come to the market, the reason why they want to dabble in the market is because of these three things. One, the three big ones. All right, one is money. All right. We all need money to buy what? We all need money to buy time. For a lot of us, the time that we have now don't belong to us. It belongs to the guy that employs us. It belongs to the nasty boss that breathes down our neck from 8 to 5, telling us what to do. We don't own our own time. So most of us want to own our own time. And the only way to own your own time, right, is to have a skill which will bring you money, and that money will buy you financial freedom. It will buy you time. I believe, and I have lived this through, I believe that if you have a life trading skill or a life skills in trading, all right, you could make this happen for yourself. So how do we become a successful trader? Or in this course, right, I will help you to bypass as many mistakes as possible. A lot of traders, when they started off new, they just want to, they don't want to, they are resisting, help. All right, they do not want to attend any course. They do not want to come under any mentor. They just want to experience the market for themselves. They want, to find out about themselves through dabbling in the market. And that, all right, you could pay a very heavy price. Like me, I paid a heavy price trying to find out who I am, all right, in the market. So how do most people start when they trade? All right, without age or without knowledge in trading, most people will depend on the mainstream media. In the days past, I depend a lot on my newspapers. Right, today, a lot of us, depend on the news, on the internet. A lot of people depend on the company earning, depend on what's written on social media, whether they are real or fake. A lot of us depend on rumors and tips given by a friend. A lot of us depend on our broker because we always think the broker know more than us. And some of us even depend on feng shui. So gamblers look for quick profit. They don't want to work. They only want quick money. But a trader looks for consistency. And to have consistency, you need to work hard. And in trading, if you try to learn everything and you try to apply everything, you could face a trading paralysis. You could have so many signals like what you're having now, so many indicators on your chart, and because there are so many signals, you just don't know what to do with it. All right, like I said, some people believe in feng shui. This is one of the most famous feng shui index, the CSLA feng shui index. So if you have been following the CSLA feng shui index in 2020, it was spot on, and it is still spot on today. All right, this 2021 chart on Hang Seng Index, all right, was also spot on. All right, if you could see, all right, the prediction was for Hang Seng to have a steep correction from February to March, and it happened. All right, and now he's saying, you can watch it for yourself. Now he's saying that in the middle of March, also middle of April, all right, Hang Seng could be doing a rebound. But then, we cannot be depending on feng shui all the time because sometimes it is really out. All right. So I remember in 2019 when I followed this feng shui, all right, I lost money and it was totally wrong. Trading is a business to me. After I left the Navy, I don't have a salary. All right, I became a professional trader. I became a full-time trader. I depended on trading, all right, to feed a family of 7. All right, so in this course, I will teach you how to trade for a living. All right, and trading is like any other business, and it is business that can be sustained are business that are scalable, they are repeatable, they are identifiable, they are something that you can control your risk. The risk cannot get out of control, and trading fits all that. Isn't it great? All right, to have trading as as your career. I sit on a trading floor for the last 13 years, and I've seen so many of these full-time trader, all right, trading for a living, and a lot of them excel and prosper through trading. Let me quote Babe Ruth. All right, Babe Ruth is a legendary baseball player in America, and he said this. All right, he said, "Never let the fear of striking out get in your way. Every strike takes me closer to a home run." All right. So How does it relate to trading? All right, in trading, it's like that. I've trained thousands of students in the years gone by, and when the students came to me, a lot of them are afraid to make the first trade. A lot of them just watch their trade go by. In fact, I just had a student that just called me and he said, "Robin, how do you handle, all right, the disappointment of missing big trades when you have a good method, you dare not do a trade and you miss the trade altogether, and how do you handle that disappointment?" All right, so this is what I do for you. All right, if you this is a course that I will help you to gain confidence in striking out, in making your first trade. All right, and the secret to the confidence of making your first trade really, it's about understanding the language of the market, and it's about knowing where prices is heading. Well, in my course, I don't teach you everything, right? I only teach you those skills that can help you make money in the stock market. And let me quote again Jesse Livermore, right? And Jesse Livermore said that you have to learn how to make your own judgment. Well, there are many ways to trade, right? And most traders, I would say 80 to 90% of the traders follow indicator, or they will follow a mentor or guru, but nothing beats depending on yourself, because a lot of times the indicators which is lagging will fail you, and the guru may also go wrong, and the guru cannot be with you all the time. So most times people follow some people follow an auto trading solution, and when the auto trading solution doesn't work, they just don't know what to do. Some people follow technical indicators. What are technical indicators? There are some stock formulas, that are invented by some stock gurus. Some people follow tips by the broker. Some people follow research reports. So why is it that I don't follow an indicator? Because indicators are lagging. So what is an example of indicators? Indicators are like a moving average, your RSI, your stochastics, your Bollinger Bands, all right, your RSI, your Fibonacci, your Ichimoku cloud maybe, all right. So those are indicators, and indicators are lagging, all right. It cannot predict where the market is heading at an early stage. All right, by the time the indicators points to a market collapse, by the time the indicator tells you to cut your position, it would have cost you arms and legs. Well, I've spoken to you for the last 30 minutes, and by now you should already know that the secret to success is really about the ability to read the language of the market. And that is what I call price action. So what really is price action? All right, price action is really about price and volume analysis. All right, so just let me give you an example. All right, for example, you see in this candlestick bars, all right, just one bar, all right, just one bar. For example, this bar here is a bullish pin bar, all right, it's a bullish pin bar, and in this bullish pin bar, all right, the prices open at almost a 3/4 way, all right, went back to the low, all right, at the end of it, and then went back to the top again to close at the high. So just one bar, right? Just one bar. We already know that this bar now, all right, is bullish, because even up to the end of the day, we have buying interest. All right, the second bar, right, is like a reverse. All right, it's like a hammer bar, or it's a very bearish pin bar. It opened at the bottom of a 3/4 way, all right, went to the top and came back down again. So at the end of the day, it is still absorbing a lot of selling pressure, and that's not good, all right. So just one bar alone, all right, we could already tell a story. So what exactly is price and volume analysis? So just reading price alone, right, tells us something. Can you imagine if you can put, all right, a volume, all right, into price, and you can now, all right, look at volume and price and make a judgment. All right, so this chart on the right, is telling us about how important is it for us, all right, to read price with volume. So here you see that the price of this particular asset class started falling, all right. In price, it fell very steeply, and it was accompanied by high volume, and that was bearish. All right, and the bearish price action continue until it hits, all right, the prices hits the bottom and start turning around. And as the price start turning around, right, and as it's rebound, and you could see that the rebound was on a very thin volume. And if you are reading the price action, all right, this rebound on a very thin volume is suggesting there's not a lot of conviction. It's suggesting there's a lot of people coming in to buy or to support the stock, and eventually it resulted in a fall again. So that is how, all right, that is a very simple example of price and volume analysis, and I hope you learned something from it. So this is an example that I always give about a price action, all right. It's about cause and effect, all right. When one event causes another to happen, all right. So in this example, it talks about, for example, if you are going outdoor on a sunny day and all of a sudden the clouds start turning dark and there is dark cloud hovering over you. For a guy who understands what dark cloud is all about, all right, he won't continue on his journey, all right. He will go back home, all right, or he will try to grab an umbrella just in case it rains, all right. So that is price action, all right. It tells you, all right, of the rain that's going to come, or the prices that's going to fall even before it falls, all right. It already gives you warning signals. So why do I use price action? In all my life, I've been using price action as my core strategy, all right? So why am I using it? Because it allows you to identify moves before or as they occur. It allows you to enter a priced move earlier. It allows you to understand why a price is occurring, all right, why a price move is occurring. It allows you to access when a move it allows you to access, all right, when a move is likely to continue and when it is likely to end. Whereas trading with indicator, it means all you can do is to react, all right, to what has already occurred, and that could be very late, and that could cost you arms and legs. All right, and then just simply hope that sufficient profit is still available on the move. All right, finally I've come to this section where I'm going to show you my past trades, all right, using price action. So this is Nasdaq 100, and this is one example of my recent prediction that was spot on. So I predicted that Nasdaq, all right, will hit a high, all right, between 13,420 to 14,600. And now we look back, all right, we saw Nasdaq, all right, hitting a high of 13,800 plus. and then it corrected all the way to close to 10,000 points, all right? As that is a very steep correction. A lot of these tech stocks, all right, corrected between 20 to 30 and even some even 40%. All right. So if you had, right, dependent on this chart, or if you had be able to draw this trade plan, you would have avoided, all right, the last carnage, all right, on tech stocks. All right, another very simple example of price action. It's about getting the trend right. All right, so recently, when I was predicting the Nasdaq correction, I was not bullish on the tech sector, and similarly, I was not bullish on the Chinese tech sector, and I was tracking the Hang Seng Tech Index. So I remember in the beginning of the year, my portfolio was made up of mainly tech stocks, and I was careful. All right, so I was careful, and I was just waiting. All right, I was just sitting on this uptrend. You see my cursor, I was just sitting on an uptrend, and I told myself, the minute when this uptrend breaks, right, I will be selling off all my tech sector stocks like Tencent, all right, even stocks like Sunny Optical, all right, stocks like some of my green stocks, all right, green energy stocks like Sini Solar, all right, flat glass and things like that. All right, so I was like, the minute the Nasdaq the Hang Seng Tech Index broke, all right, it was simple. I sold off my stock. I even turned into shorts. All right, like I say, whatever I do is not closet trading. You could see on my chat here, I announced on my live chat group that the Hang Seng Tech, all right, ETF, all right, the Hang Seng Tech Index, all right, has experienced its first breakdown, and I am turning bearish on the 23rd of February. And you saw what happened, after I turned bearish. All right, the Hang Seng Tech Index fell for the next 1 month. All right, it fell for the next 1 month before rebounding. And when this chart started rebounding, I started covering my shorts and taking my profit. And so now I'm just looking for a new trend to form on the Hang Seng Tech Index. So the next example I want to show you, it's about Tesla and how we could use price and volume analysis to predict the price action or the movement of Tesla stock. All right, so watch my cursor carefully. All right, so back in October 2019, all right, you could see a very big spike in volume, which is what I call one good volume. I believe everything starts with energy, all right, and I call volume energy. All right, here we have energy coming into Tesla, all right, and it caused a price gap up, all right, on Tesla, and this is where Tesla was at the $300 region before it went into a stock split. All right, so this is the early stage, and I remember, all right, back then in 2009, a lot of people like me, all right, I was shorting Tesla, and the reason why I was shorting Tesla was because of the research report or the analysts that were saying that Tesla could go under because their cash flow is going to turn negative, and they were not producing enough vehicles to sell, and therefore they were going concerned. And so I believe that story. I shorted the market, but the minute I saw this volume surge all of a sudden in October, and also the price surge, I started covering my Tesla short, and I started watching Tesla, all right, and I saw Tesla, all right, so you saw that here, Tesla after the volume surge, all right, which means, all right, to me, a big boy has come into Tesla. All right, after the volume surge, Tesla went on a sideways trading, and you could see that the price of Tesla started to increase with a very healthy volume increase. You saw that? A price increase followed by healthy volume increase. So I remember a lot of my friends were asking when Tesla hit above the 900 region. A lot of my students, my clients, they were asking me, should they get into Tesla? It's such a good story about electric vehicle play. It's such a good story about the future. But I issued on in February. I showed, all right, my price action or price volume analysis on Tesla, and I said, hey, look at it. If you are thinking of buying Tesla, be careful, because I'm starting to get bearish. Why am I getting bearish? I'm getting bearish because of this toxic volume. A lot of people will see this as a good volume, but I see it as a toxic volume, all right? And because this volume, it's about greed. Too many people have gone into Tesla, and that is dangerous. If this fails, all right, if this volume fail or the price break below this volume, it could become dangerous, and therefore I was turning bearish and I was getting people out of Tesla. And lo and behold, you saw what happened after that. This bar, right, this high volume bar, which is I call a greed bar. All right, which means a lot of people have just gone in Tesla, all right, just going in on greed, all right, without a lot of considerations. And see what happened. Tesla did a double top and it crashed, all right. And from 980, all right, on the high, Tesla went to as low as 350 at the low. Right? So can you imagine if you don't understand how to interpret price action, all right, you would have suffered a hefty loss on Tesla if you have gone into Tesla at 900, or if you had even bought Tesla early and you have not taken profit, you would have cut you have lost out a lot on your profit, or even cut your losses on Tesla. All right, so another example of a great trade plan that I did was gold. Right, so back in the middle of June 2019, I sent an email to my client and I said, hey, watch, all right, this gold price action. Right, gold has been testing this upper end of resistance, all right, for 8 times since 2016, and just by the price action, right, I believe, and I said here, gold is going to break out. And when gold break out, right, it will be the start of a mega bull run for gold. All right, and so when I know, all right, and I believe that the gold breakout is going to come, what do? I watch it very closely for the breakout that's going to come, and true enough, the breakout came, right? So 14th of June was where I predicted gold is going to break out, and true enough, a week after the 14th of June, gold breakout, and I declared the start of a mega bull run for gold. All right, so my strategy is this, all right? So when I believe that an asset class has entered a bull market, I have to create a trade plan. So this was where the gold breakout at 1380. So what did I do after gold broke out? I came out with a trade plan, and I said that, all right, the first target for gold would be 2000, all right? So gold hits 2000 exactly there, pulls back, all right, now last done about into the 1740 zone, all right, and gold is still consolidating here, and I believe that this whole trade plan has not been played out. Maybe at later at the end, towards the end of this year, I believe gold will start its run again to complete, all right, the whole cycle of this trade plan. So another example of price volume analysis is this stock called Magtech. Magtech is a stock listed on the Singapore Stock Exchange. All right, it is a company that deals with healthcare product. All right, so when COVID came, these are the companies that were in favor. All right, and look at this trade plan for Magtech. All right, so Magtech was on a prolonged downtrend for many years. All right, and then you see a volume. Similarly, all right, to the example as I showed you in Tesla, everything starts with a volume. There's a volume surge, and after the volume surge, MACD broke out, and MACD, all right, broke from 4 cents. All right, that was a buy signal at 4 cents, and from 4 cents within a week plus, all right, it went 5-bagger to 21 cents, and after 21 cents it corrected. I know a lot of traders got out of it, all right, and never bought MACD again. But see what happened to MACD, all right, it shot to 1.95, and that made MACD, right, one of the best performing stock in the world. See, if you understand the language of the market, if you understand price action, this is the results you will be getting. All right, so these are the stocks that you could spot on your own. Another example is Rex. All right, so Rex is in the oil sector. All right, so it does oil exploration through its own proprietary technology. All right, so because you know the oil market or the crude oil was on a downtrend for many years, Rex followed the downtrend. But watch what happens here. All right, see the volume. So the downtrend was down very thin volume. All of a sudden you see there's a volume surge, and Rex started to break out, and after the breakout, we saw Rex from 8 cents hitting 21 cents. All right, so this is another good example of price volume analysis and how you could profit from price volume analysis, and how your timing, all right, can be so good if you are just following the price and volume movement. All right, the last example I'm going to give you is about China Mobile. And all of us know back in January, US blacklisted China Mobile. And you all know that when a company is blacklisted by the US government, no fund managers or no investors, all right, US citizens can hold China Mobile on the US stock market. All right, so when the news was announced, all right, there was a massive sell-off on China Mobile. All right, while everybody was selling, you see, I came out on my blog, and it came out on my Facebook, and I told all my followers, all right, that watch out this sell down. All right, so this sell down is a buying opportunity, particularly this capitulation bar. See this volume, high volume again, when everybody think this volume is toxic. I thought it was good, and I came out with a trade plan. I said buy China Mobile at $41, all right, with a target to sell, short-term target, all right, for $44 and $50, and a stop loss of $39. And you could see that all these people who followed my trade were also happy. And you look at all the celebration here, all right, and you know, people who follow this trade took profits. All right, they took profit almost immediate. All right, so they bought China Mobile right here, and within a week, all right, China Mobile already hit the target of $44 and $50. And you see, when it hit $44 and $50, that was a great trade plan. All right, it was a great trade plan. It hits there, it pulls back before it hits up all the way to $58, and everything happens within 3 weeks. All right, so can you imagine, all right, if you are able to read price action when everybody is selling, you are buying. When everybody is bullish, you are bearish. All right, if you are able to read it, right? There's no signal to buy here. From if you have an indicator, there's no signal to buy. All right, but if you are able to read price action, all right, you would know, all right, where and when, all right, to buy the stock. Well, I hope what I've shared with you today has made an impact in your life, and that really is about price action and how you could use price action to profit from the market, and why price action is key to a trader's success. I hope, all right, this over the last 1 hour, all right, the things I shared to you about price action will ignite your interest in price action, and I hope that this interest will help you want to find out more about price action. And if you want to know more about price action, in my next two video, I will be sharing more secrets about price action. So I hope to see you in my next video. All right, stay with me. Thank you for attending today's seminar. It has been a long 1 hour. Thank you for your patience. See you again.